Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamwin, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Janine, let's kick things off with some important news from the Bank of Canada. According to John McFarlane's report, the Bank of Canada is expected to hold the key interest rate steady this morning, even though core inflation is starting to heat up. This is quite a significant decision, isn't it?
It really is, Steve. The Bank of Canada often uses interest rate adjustments as a tool to manage inflation and economic activity. Holding the rate steady suggests they might be taking a cautious approach, perhaps waiting to see how inflation trends develop before making any drastic moves. It's a balancing act, especially when considering the impact on borrowers and homeowners.
Absolutely, Janine. For those in the real estate and mortgage sectors, a stable interest rate can mean predictability, which is crucial for planning and decision-making. However, with core inflation heating up, some might argue there's a risk of the economy overheating if rates aren't adjusted accordingly. What are your thoughts on that?
I see your point, Steve. Inflation can erode purchasing power, which affects everyone, especially those planning to buy a home or refinance their mortgage. But on the flip side, raising interest rates too quickly could dampen economic growth and make borrowing more expensive for everyone. It's a tough call for the Bank of Canada, balancing the need to control inflation while supporting economic growth.
Indeed, it's a complex situation. The key takeaway for our listeners is to stay informed and keep an eye on how these economic indicators might influence their mortgage rates and real estate investments. As always, having a solid financial plan is essential when navigating such uncertainties. Now, Janine, let's tackle a hot topic that's been stirring quite a debate in the Canadian mortgage industry, the mortgage stress test. There's a growing conversation around whether it's time to reduce or even eliminate this requirement. What are your thoughts?
Well, Steve, it's definitely a complex issue. The stress test requires borrowers to demonstrate they can handle higher payments than their contract rate, which some argue limits purchasing power and freezes out potential buyers. But it's also been credited with preventing a larger crisis, especially given the recent spikes in interest rates.
That's a good point, Janine. The stress test, which requires borrowers to qualify at 5.25% or 2 points above their contract rate, whichever is higher, played a crucial role during the rate hikes we saw in 2022 and 2023. Victor Tran from Rates.ca highlighted how it helped homeowners manage the impact of these spikes, particularly as many face renewals in 2025 and 2026.
Exactly, Steve. While we haven't seen a major crisis yet, Equifax reports a significant rise in mortgage stress, particularly in Ontario, where the delinquency rate jumped by 71.5% in the first quarter of 2025 compared to last year. It's concerning, but the stress test may have helped contain this rise.
The numbers are indeed worrying, Janine. But even with the delinquency rate at a historic low of 0.24% in Ontario, the stress test seems to have played an important role in keeping things from escalating further. Some brokers, like Alex Lavender, argue that reducing the stress test to 1 percentage point above the contract rate could ease the affordability issues buyers face.
Yes, Alex Lavender from Centum Home Lenders points out that high home prices, combined with the stress test, make affordability a nightmare for many buyers. Reducing the requirement might give buyers more purchasing power, particularly in less volatile regional markets.
That's an interesting perspective, Janine. Taz Zaid from Six Mortgage Group also mentions how more flexibility in the stress test rules could open up opportunities for realtors and mortgage brokers to engage prospective clients. It could have a significant impact on the market dynamics.
Absolutely, Steve. While the stress test has served its purpose, it's crucial to find a balance that supports homebuyers without compromising financial stability. As always, staying informed and consulting with trusted mortgage professionals can help navigate these challenges.
All right, Janine, the Toronto Regional Real Estate Board has released its latest report, and it seems the Greater Toronto Area continues to be a buyer's market. Sales have dropped over 13% year over year, while new listings have increased by 14%. What do you make of these numbers?
Well, Steve, it appears that potential homebuyers are gaining more negotiating leverage with the increase in inventory. This could be a great opportunity for those who have been waiting for the right moment to enter the market. More options and less competition can make a significant difference for buyers trying to find a home that suits their needs and budget.
Absolutely, Janine. The average home price is down 4% compared to a year earlier, now sitting just over $1.12 million. This price adjustment might be enticing for buyers, especially in such a competitive market. However, the TRREB's Chief Information Officer, Jason Mercer, notes that softening economic confidence is influencing these buying decisions. What are your thoughts on that?
It's true, Steve. Economic confidence plays a crucial role in home buying decisions. When potential buyers feel uncertain about the economy, they might hesitate to make such a significant investment. Mercer suggests that once households believe trade stability with the United States has been restored, we could see a pickup in home sales. It's all about creating a sense of security for buyers.
I agree, Janine. The market dynamics are certainly being affected by broader economic factors. While the current market conditions favor buyers, it's important for them to stay informed and consider how these economic uncertainties might impact their long-term financial plans. As always, having a solid strategy is key when navigating the real estate market.
Definitely, Steve. It's a complex situation, but for buyers ready to make a move, this could be an opportune time. Consulting with real estate professionals and financial advisors can provide valuable insights and help potential buyers make well-informed decisions. The goal is to find a home that not only meets their needs, but also aligns with their financial goals.
Today, we're diving into a concerning situation involving Ontario's financial services regulator, the Financial Services Regulatory Authority, or FSRA, which has taken enforcement action against Chandrakant Jindal. He's alleged to have committed multiple breaches of provincial regulations in both the insurance and mortgage sectors. Janine, what are some of the allegations against Jindal?
Well, Steve, FSRA alleges that Jindal provided false or misleading information while soliciting or registering insurance, which is a violation of the Insurance Act. They also claim that he does not meet the suitability requirements to hold a mortgage agent license under the Mortgage Brokerages, Lenders, and Administrators Act. This raises serious concerns about his integrity and compliance with legislative requirements.
That's right, Janine. The regulator has gone further to allege that Jindal made a material misstatement or omitted required information in his most recent mortgage license renewal application. As a result, FSRA has proposed denying the renewal of his mortgage agent license and imposing a $5,000 administrative penalty under the Insurance Act. What does this kind of enforcement action indicate about FSRA's approach in such cases?
Steve, it seems that FSRA is taking a firm stance on ensuring compliance with regulations across both the insurance and mortgage sectors. This is evident as they've been actively pursuing enforcement actions against individuals who breach regulatory requirements. For instance, just last month, FSRA imposed a $100,000 penalty on another individual for conducting insurance business without a valid license. It's clear that FSRA is committed to maintaining integrity within these industries.
Absolutely, Janine. This isn't an isolated case. FSRA also recently announced a $50,000 penalty and compliance order against a former license holder, Daniel Emerson Tiffin, who continued offering insurance advice after his license had lapsed. These actions send a strong message that compliance is non-negotiable. How do you think these enforcement measures impact the industry at large?
These measures certainly highlight the importance of adhering to regulatory standards, Steve. By holding individuals accountable, FSRA aims to foster trust and reliability in the financial services industry. For professionals, it underscores the need to remain transparent and ensure all information provided is accurate. It's a reminder that the actions of a few can affect the reputation and trust in the entire sector.
Well said, Janine. It's crucial for industry professionals to uphold high ethical standards to maintain public confidence. As for Chandrakant Jindal, he has requested a hearing before the Financial Services Tribunal to review FSRA's proposals, so we'll have to wait and see how this unfolds. But for now, it's clear that FSRA is not shying away from taking decisive action to uphold the law. In our final segment today, we're shining a spotlight on some impressive achievements in the Canadian mortgage industry. Canadian Mortgage Professional has just revealed its annual Top 75 list for 2025, highlighting the top-performing mortgage brokers across the country. This list showcases the brokers who have managed to maintain high volume and success despite the challenging market conditions we faced last year. Janine, what stands out to you about this year's list?
Steve, what really strikes me is how these brokers have thrived even with the economic turbulence and high interest rates that characterize 2024. It's a testament to their adaptability and resilience. The brokers on this list have demonstrated an impressive ability to keep business flowing and seize new opportunities, which is no small feat given the circumstances.
Absolutely, Janine. The criteria for making this list were quite rigorous. Brokers had to submit their overall funded volumes for 2024, which were then verified by aggregators, franchisors, or lenders. Their success is not just about numbers, though. It's also about the relationships they build with clients, their clarity in communication, and their ability to leverage both technology and a personal touch. These elements seem to be the key ingredients for success in this industry.
That's right, Steve. It's about finding that balance between using high-tech tools and maintaining a human connection. It's impressive to see brokers like Danny Ibrahim, Chris Allard, Goldie Singh, Joanna Zhou, Ryan LaHaye, and Waleed Mudahar making the list. They've excelled in regions with varying market conditions, which shows their versatility and commitment to their clients. It's inspiring to see such dedication to helping clients achieve their homeownership dreams.
Indeed, Janine. This list also shines a light on brokers in smaller markets who are breaking new volume barriers, particularly where average home prices are below $657,145. It highlights the diverse challenges brokers face across different regions and how they're overcoming them. It's clear that trustee, clarity, and connection are not just buzzwords, but essential components of their success.
Absolutely, Steve. These brokers are setting a high standard for the industry, and their achievements remind us of the vital role brokers play in guiding clients through the mortgage process. It's about more than just closing deals. It's about building trust and providing clarity in what can often be a complex journey. These brokers exemplify those qualities.
As we wrap up today's episode, it's worth acknowledging the hard work and dedication of all the brokers who made it onto the Top 75 list. Their success stories are a reminder of the opportunities that exist even in challenging times. Janine, any final thoughts?
Just that it's inspiring to see such resilience and innovation in our industry, Steve. These brokers are proof that with the right approach, success is always possible. Congratulations to everyone who made the list, and here's to continued success for all mortgage professionals out there.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.